With FOMC releasing in just under 24 hours, we are expecting a whole heap of volatility to enter the market. The big question today is, will this volatility and FOMC release facilitate a breakthrough that major $24,000 resistance, triggering a macro uptrend for Bitcoin, or are we going to see that rejection? Let's get into it. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day. We're going to go ahead and jump into the charts today. And today is a big day, of course. Today is the FOMC data release, and that is occurring in about 16 hours. As you would know already, interest rates play a massive role in determining price direction, as it directly influences perceived and actual systematic risk, which drives, or should I say, one is one of the main drivers of asset prices. Before we get into it, smash the like button, hit the comment button. Of course, subscribe to the channel if you are new. We do daily videos on Bitcoin, focusing on the charts, focusing on price action, focusing on technicals, and focusing on the broader markets and economy as a whole. You can also access our Telegram channel where we're posting the FOMC data directly live in here. All of our updates, charts, videos, analysis, information, and educational posts can be found in here, as well as access to our VIP channel, where you'll get access to our main trading chat and a group chat over here. All membership details can be found, and our trading track record since 2021 can be found over here with some results in January 2021, for example. Let's go ahead and dive in, and we'll start off the market data. Currently, February is down 0.2%. Again, nothing too massive, guys. We really just started the month, so nothing really to worry about. The key piece of information here is January closed near 40%, a significantly bullish month for Bitcoin. Absolutely phenomenal to see. What we're looking at here now is a drop in 24-hour trading volume. We are down to 68 billion, and we've had a 63% drop in liquidations, where liquidations have come down to 58 million. Most of the liquidations have, of course, been a decent spread between shorts and longs. We've seen a lot of liquidations on longs, a lot of liquidations on the shorts, and again, this is slowly starting to plateau and even out pre-FOMC, where we do expect this to ramp up again. Volatility is 2.31%. Again, steadily climbing, and that is expected as we have had such an amazing 4-week period with significant price action. Now let's go ahead and talk about the broader markets, then we'll jump into FOMC, and then we'll finish up with our Bitcoin analysis. So the DXY did actually end up breaking out of that falling wedge structure we've been talking about for the last couple of weeks. We saw an initial impulse upwards, reaching that 102.6 level, not quite reaching that 103 target as of yet. That can definitely still swing around towards the upside, guys. Do keep in mind, if we do lose this 101.3 level, we are going to be continuing down quite aggressively. That, of course, will be very, very bullish for the traditional markets and Bitcoin. This, of course, will be quite bearish for the traditional markets and Bitcoin for the short-term price action. Now, keep in mind, guys, the FOMC data release is going to massively impact what the DXY does and where it goes. So although we can look bullish going into FOMC, we could definitely turn around. And that's the key thing I want you guys to understand today. It doesn't really matter how the charts are looking too much leading into this, as the data that is released, which is not public information yet, is going to drastically shift the direction of the market, or confirm the direction of the market and allow it to continue with more volatility and aggression in that singular direction. So DXY is looking like that. The S&P 500 and our Dow Jones are still at resistances with a nasty rejection yesterday, only to rally back up to retest once more. Again, guys, markets are waiting on FOMC data. They're not going to make these directional moves until the data comes out. Looking for a break above here will be very, very bullish. And of course, we've already talked about the move toward downside. We're looking for this downward trending support as well as our uptrending support as two potential support levels. But again, guys, breaking through this resistance level will facilitate a strong continuation upwards for the S&P 500 to 4,300. Looking at the bond yield, guys, we are testing that downward sloping resistance on the 2 years, indicating again that we are potentially at resistance here. The DXY has pulled back, and we could see a little bit of consolidation before a breakup, or even possibly another leg down. Again, looking for a daily break above this level here will confirm a breakout. And as you already know, guys, rising bond yields equal rising DXY equals falling markets. So keep your eyes on that. Let's go ahead and talk about FOMC first and foremost. 15 hours and 58 minutes until release. What is the market currently expecting? So By the looks of things, it is 99.4% expecting a 25 basis point hike. This, of course, is down 25 from last hike, which was 50 basis points. We've got a 0.6% chance of basically remaining neutral. I think it's very unlikely to remain neutral. What I'd be looking at on the market right now is a 0.25, which is the current expected, could potentially have a bullish or bearish reaction. It's very hard to say for sure, guys, because the markets have rallied so much in anticipation of a Fed pivot, and that Fed pivot meaning a decreasing in interest rates until the interest rates go into the negative. That is on a pivot, but expectation that that decrease will continue is the reason why the markets have been rallying over the last few months, and we'll come back and talk about it in a second. But it's essentially a concept called perceived systematic risk. Markets massively front run actual systematic risk in a market. Like I said way back months ago, we're talking about half a year ago, I said the market, the interest rates will not need to pivot to the negative. They'll just need to show a steady trend downwards for the markets to start rallying upwards, and it's exactly what we saw. So 0.25 basis point here, of course, that is going to give a mixed reaction in the market. We will have to wait and see what happens. If we do get 50 basis points, we do expect a bearish reaction in the market. We actually do expect a strong crash. The reason being is because interest rates hike based on inflation. If inflation is decreasing, interest rate hikes don't need to be as aggressive because it indicates that the interest rates are doing their job. So generally when we see a falling inflation and falling interest rates, it means the trend is downwards and we eventually do expect that pivot. If we start to see plateauing in interest rates or increase in interest rate hikes, again, we generally expect that interest rates are not doing an effective job to counteract inflation, and therefore more future rate hikes need to be necessary, and of course that is perceived to be bearish for the markets, and we generally see pullbacks or potential crashes. So let's go ahead and talk about that in a little bit more detail on this chart, and then we'll get into our Bitcoin analysis. So I think it's over here. I drew a bunch of different charts up here. If you've been watching the channel for a while, you will be very much aware of how all of this stuff works over here. So let's take a look. This chart over here particularly, and this is a very interesting chart over here. It shows I guess it shows the correlation or how the interest rates work and how the asset prices shift. So the red line over here is the inflation curve. Generally we have inflation rising, interest rates rising, inflation rising. Interest rates are delayed to inflation, meaning they rise after inflation starts rising, because why would you rise interest rates if inflation isn't rising, right? So we have this delayed effect. As CPI starts falling, interest rates eventually start falling. If CPI continues to fall, that expected trend direction here, this dotted line, is what constitutes perceived systematic risk, okay? Perceived systematic risk. Perceived systematic risk represents what the expectation of future systematic risk to be like, okay? Systematic risk being interest rates, okay, taxation policies, monetary policies, and inflation. So if the inflation curve is heading downwards, if interest rates are heading downwards in conjunction, and we do have an expected trend of that continuing, the perceived systematic risk turns positive, even though the actual systematic risk is still negative, and the markets rally. So if interest rates come out at 0.25 today, this curve continues as is. The markets will generally do well unless they've been over pushed and priced in, and the markets might experience some turbulence, some volatility before it heads back up. If we do see 50 basis point hikes again, this curve does get slightly impacted. It slows down a little bit, and that will negatively shift perceived systematic risk downward, so worse, and that can increase the probability that we see a market crash or at least a market pullback. So that is why interest rates are important. That is how interest rates generally affects the economy and the markets. We can go into a lot more detail about it over here. 1 second, we'll jump into it now. So this is a visual chart representing not only the direct correlation between stocks and crypto, but also the broader economy and the return on the investments in comparison to these two assets. As you can see, stocks have a smaller return on the investment over here, that is 0.2. It's also because it has a lower beta. So it's got a lower risk, and as it has a lower risk, it also generally has a lower return in comparison to crypto, which has a higher risk and generally also a higher return. As the systematic risk here decreases, we see a drop, or should we say an increase in the beta. A higher beta equals a higher risk return. So the price action starts to fall, it becomes more risky, but as the price action starts to fall, the return on the investment also becomes more favorable. So we do have to keep that in mind, guys. That is how it's all connected. I hope you found that informative. We have talked about this a lot more on the channel. We've got extended videos discussing this if you want to find out more information. But however, let's get into Bitcoin. I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you could do so with the link in the description. Thanks for listening. So as we said already, guys, Bitcoin has reached a weekly macro resistance. This weekly macro resistance is represented by that first red box on the chart. This red box constitutes the area between 22,600 to 24,000. As you can see, we had that December 2020 crunch zone, which lasted 1 to 2 weeks, so it's not going to pop up on this chart very well. And then we had that local top over here and resistance range in August 2022. As you can see, the point of which we needed to break above to see a continuation upwards is going to, of course, be, okay, that high that we printed in August. So breaking above this level here is essential on the weekly chart to see a continuation upwards. That is that exact resistance we have been struggling to break above now for quite some time. There's a resistance that is going to turn this reversal structure, okay, this is a reversal structure, into a macro uptrend, okay, macro uptrend. We'll show you an example in the smaller time frame. So a breakout of our falling wedge structure here resulted in a reversal, okay, this is our reversal. For this reversal to develop into a macro uptrend, we need to break above this local high and clear the high of the falling wedge structure to validate a reversal of this structure has been complete and a macro uptrend will initiate. Until that happens, guys, the probability and risk that we fall down on the short term is actually significantly higher than the probability that we directly break through this resistance. And not only can we say that from a price action standpoint, but from a technical standpoint, we see that in the charts. We have been seeing decreasing momentum. We have seen weakness in the trend, whether it be on the EMAs on the larger time frame. We're seeing weakness here, whether it be, again, the RSI momentum falling, whether it be cracks in the Ichimoku cloud. The price action has been weakening. Volume, volatility, and momentum has been falling as price has risen into major resistance. Therefore, the probability of a drop is more likely. We've been saying this for a while now because the facts are the facts don't change. Now, here is the thing. Regardless of all of that information, regardless of all that bearish information on the short term, if FOMC comes out positive, none of that matters. The price will rally, okay? None of that matters. FOMC can completely ignore technicals, completely disregard what the chart and price action is looking. It can drive and push prices in directions. And this is why I always say, if you are trading news events, trade with caution, as the data required to make decisions is only available immediately at a specific time. You can't take time to analyze charts like you can when you do technical analysis. You have to make rapid decisions. And generally, the data you use to make those decisions are actually leaked to bigger players a few minutes earlier than you get access to it. So not only are you late in the data that you have available, but the players who you are competing against have the data earlier than you and can manipulate the price to catch you off guard. So it's a very dangerous time to be trading. Trade with small amounts. Consider it nothing more than a gamble if you do trade FOMC. Moving on, guys. For the lower targets, like we said already, if we do lose this level here, which again, the level we do need to lose is going to be this 22,530 level, this local low here, we will continue down 21,500, 20,800, 20,100, 19,500 as those lower targets. Those are the expected targets on the way down. On the way up, guys, if we do break a daily and close a daily above that 4,200, we can expect a continuation over the next few weeks into that $28,000 to $30,000 level. Until then, we are expecting a rejection and continuation downwards until that breakout occurs. Okay, guys, we're looking for longs again, layered down through here as the price comes down, if it does come down. Again, FOMC is going to throw a spanner in the works and shift that market direction. So we do have to be very cautious and aware that nothing right now is set in stone. Everything is subject to change based on the data that will be released. Okay, I'm going to leave the video here, guys. This is really not much to talk about today in regards to that, because again, there's no point going over too much when everything can be changed as FOMC comes out. I did want to do a video to talk about FOMC and give you a brief understanding of what's happening on Bitcoin. Tomorrow, we'll do a much more in-depth analysis again, going into our longer videos, discussing what impact FOMC had, what the price action is going to do now, and what we can expect next. That being said, guys, go ahead and sign up to the Crypto Academy course. This is a course where we teach you technical analysis from the building blocks all the way up to the most experienced stuff. We teach you analyzing, we teach you trading, we teach you market charting, we teach you absolutely everything from structural analysis, technical analysis, even risk management and market psychology. So go ahead and contact us here for more information. We'll send you the worksheet with all of the information, what to expect from the course, and you can go ahead and make up your decision there. That being said, I'll see you guys tomorrow. Cheers.